Hey guys, good afternoon. It's Tony. So I did get a question about McDonald's and if it was looking or if it was primed for a breakout strategy. And I did want to actually um, use McDonald's as an example of what I call a double on breakout, which is kind of in addition to the strategy that I'm currently using. Um, you guys already know that the current strategy that I use is depending on relative movement. We look at relative highs to lows, which would be this relative high from June 14th, the week of June 14th, extended out to the relative low of May 10th, right here, the week of May 10th. This should be a relatively simple setup, right? Like we'll do that one right there. We'll do that long position right there. So this does contain that's my that's my little girl. So this does contain a double breakout, which I like to kind of, for this I would play definitely a month and maybe 3 months out for McDonald's to be on the safe side. We do have confirmation on the reverse MACD trailing for a lot of bullish movement, and the monthly still looks pretty strong, right? So on the weekly, the first thing we would actually do is, again, play the breakout strategy exactly how you would every single other time. Go down about 2.5%. Wow, this is actually this would be a pretty horrible return. Look at that. 2.5 would actually be down here. I don't even know if I would play this because it doesn't seem like it's too much of it's not even that much of a big push from here to the 618. So actually this is not an example of a of a double long. These shark fins would have to be a little bit more extended, or at least these peak mountain tops, right? So second, whoops, that's the wrong thing. So essentially what you would have to do is just use relative highs, which is back here, put it down to actual lows, which would be the low of March 1st over here. You just extend it down to March lows, basically the same thing. And now we are looking for an extension of that 260. I've been a little bit more risky on my plays lately, so especially with McDonald's or like any other bigger stock, I do like a 2.5 generally instead of a 5% on the downside. And again, this would be just a regular what is it called? Just a regular breakout strategy for this. So 25342, extend that rectangle out, push to the upside about whatever the same thing is, and you would set your take profits. First take profit 25342, second take profit 259, and third and your riskiest take profit would be 267, which would more than likely be your runner. Let me just change this really quick to different. Why can I select? Oh, you know what? That's why I couldn't select that. Let me delete all these for you guys. Sorry, I want my family outside. Take these out. Oh, there we go.
Oh my gosh, you're so much bigger now.
So take that out. Change these colors.
It looks like you grew like 6 inches. What is that?
And you basically have your setup right there, especially if it breaks to the upside. Again, we're looking for a candle somewhere along this range on the weekly break. So let's say the weekly candle breaks somewhere from here all the way to the upside. You have about a 5% increase in price, which means that more than likely you're looking at something like a 50% gain at first take profit for McDonald's, depending on how high premium can actually go for. So at a move like this, from what, essentially like 240-ish up to 253, which is the first take profit, you could expect somewhere around, I don't know, like a 50% gain if it hits. And again, last time we actually had a move to the upside. Like last time we actually broke to the upside, it was from highs of here October 12th to lows of May 11th. Last time I actually broke to the upside, it really only went up for about 4 weeks or so. And then previously from that, what did we do? So we'll do low to high. You know, last time it actually broke to the upside. Before that, it was what, 1, 2, 3, 4, 5, 6, 7, 8. Yeah, so about 8 weeks. Yeah, I would say definitely I would go longer than 8 weeks. I would probably do, if McDonald's looks like a solid play, but again, McDonald's is a lot slower mover than, say, Apple or Amazon or, you know, Microsoft or whatever. So if you are playing McDonald's, I would say typically you would want to get something like maybe 3 month out calls just to be on the safe side. I would say minimum maybe 2.5 month 2.5 month calls out, to be completely honest. And a play like this, depending on premium, I might look into either, you know, sticking to that 253 for the calls, or I might end up picking up something here. So you guys know that I like to be conservative, so I might actually buy, you know, calls in between 238 to like 242. I might buy calls in this area of in the money strike, and then I'd buy a 253 and 259 for about 200. Everything's gonna be about 2.5 months out minimum. Definitely for McDonald's, definitely for a play like this, just because it looks like McDonald's doesn't run that quickly and that violently. So again, McDonald's, solid play. Would definitely put this on the breakout strategy 100%. But again, be safe with it. If you're gonna do something like this, I definitely recommend minimum at least 2.5 month out calls once you actually have a candle break to the upside. So again, you want your candle to look something like, let me see, something like this, right? You want your candle to look something like that. Let me delete this so it's easier to see, and I'll delete that one too. So you want your candle to look something like that white bar that we just created there, right? That's what you want your candle to look like. Something like that. You don't want it closing like right under. You see how it's wicked here? That's not what you want. You want it looking something around it, something like that, where you have a full close above recent relevant price. That's exactly what you want it to look like. So McDonald's, great play. Definitely recommend doing it only if the candle looks like this, and only if you're doing it minimum 2.5 months out. So I'll see you guys later.